Good afternoon, my people. Um, Today, I want to share some things with us again. And what I will be discussing today is how to trade candlestick pattern. How to trade candlestick pattern. So, the first candlestick pattern that I will be talking about is what I call engulfing pattern for bullish candle. So that's engulfing bullish candlestick pattern. So in this case, it means that a particular candlestick will close above the previous candlestick. Then what do I mean by that? So we can see rightly from here that we have a bullish engulfing candlestick. So here is an example of a bullish engulfing candlestick. So you can see from where I circled. Let me zoom out the chart. Let me zoom out. So you can see that the candlestick here, the candlestick here in this place is bullish engulfing candlestick. So it's a signal that the buyer, they are about to take control of the market. So you can see that the candlestick closed above the previous candlestick. So the market have to obey the law of price action and still retrace back here before you begin the upward side. You can see that the market have to first of all pull down like this, then it goes to the upward side. So you go to the upward side like this. So that's bullish engulfing candlestick. So that's for bullish engulfing candlestick. So let me look for the opposite one, which is the bearish engulfing candlestick. So bearish engulfing candlestick. So it's opposite of what we said earlier. So it's opposite of what we said earlier. So the previous candlestick will close below. I mean, the current candlestick will close below the previous candlestick. So let's look for a very good example of a bearish engulfing candlestick. Let's look for example of bearish engulfing candlestick. Look for very good example here. I think I see one. See one here. So this is an example of a bearish engulfing candlestick. This is an example, though it's short uh, set. So you can see another one here. So this is an example again for the bearish engulfing candlestick. So the market, so it's a signal that the seller, they want to take control of the market. You can see this, the market retrace here, then it retrace back to that particular level, then it come towards the downward side, come towards the downward side. So that's a bearish engulfing candlestick. Then the next one is bullish hammer, so you can say hammer. So hammer is this. Let me look for an hammer. So it means the candlestick will not have a big body, so we just have a small body, just have a small body, just have a small body. I've seen one here. You can see this is an example of a hammer. This is an example of hammer. So we only have small body. So this hammer, this hammer. So it's a sign that the buyer so is about to take control of the market. That is, the bullish uh, market is about to take place. So you can see that the market have to retrace from here down here. Then you can see that the next candlestick, the buyer take control. The market have to obey the law of price action, come back to this place, then you go to the upwards side. This is an example of a hammer, and that's the market reaction on it. Then the next one is a shooting star. A shooting star. So it's the opposite of hammer. So the market is going to be have is very tiny body. So it's very tiny body. You can see another one here. This is an example of a shooting star. This is a shooting star. This is another shooting star here also. Then let me also look for another shooting star. You can also call this a shooting star, but it's not too big. This is a shooting star also, but it does not obey the it does not obey the market action, the price action. So they are still looking for another one. This is a shooting star also. We have another shooting star here also. It's a signal that the seller is about to take control of the market. That is a shooting star. Shooting. This is not a shooting star, but you can still regard it as a shooting star. So we have them a lot like that. So there's another one here, and also still looking for another one. So you can also call this a shooting star. Also, this is a shooting star. This is a shooting star. Also, this is a shooting star. Then the last one is a we call it doji. Dojy. Doji. Dragonfly doji. Dragonfly doji. So in this one, it means the candlestick will not have any body at all. That is to be a rejection candlestick. It will be a total rejection candlestick. So it will not have any body. So let's see a very good example. I've seen one here. This is a doge. So it's price rejection. This is a price rejection here. There's a price rejection in this place. Then we look for another one. It should not have anybody at all. There won't be any body on it. So look for another one here. This one is a doge, but it's a grave stone doge. So graving stone. This is a graving stone doge. Still looking for another one. I also call this one a doge, but it doesn't have anybody. It's a rejection candlestick that the market don't make any decision. So you can see also here that this is a doge, nobody, there is nobody at all, nobody, and so on and so forth, and so on and so forth. So why do we need all this candlestick pattern? We need them to make decision, to know when exactly do we enter into it. Now the first one I mentioned earlier, which is the engulfing candlestick, so that the bullish engulfing candlestick. So we will see that immediately the market close above the previous one, there will be a market reaction. You can see that there was a reaction. So you can see that there will always be a reaction on it. So there will always be reaction on it. Likewise, the hammer and the shooting star that I explained earlier. So you can see that there was a price rejection and the market moved down. Price rejection, market moved to the downward side. Price rejection, market moved downward side. So that is my own view today. And this is a disclaimer. This is not a financial advice for anyone. It's just my own opinion on market sentiment and reaction. So thank you very much for your time.